Good morning and welcome to this, our fourth in the series, the Tide webinar series. This is the Tools for Industry Diversification and Entrepreneurship, hosted by the Island Institute and in partnership with the Small Business Development Centers. Today, we'll be talking about funding opportunities for commercial fishing, always a popular topic. Everybody wants to understand what is out there for financial resources, and we're going to get into it today. On the next slide, you'll see we do have one more webinar coming up on May 1st, Building Better Credit, Strengthening Your Financial Future. And if you'd like to access any of the past webinars that you see listed here, they are on the Island Institute's Future of Fishing website with all the YouTube links and the resources referenced in each one of them that you can download. These are great resources that can walk you through whether it's preparing taxes, helping you plan out some of your business planning and some of those strategy documents that you may need. On to the next slide. My name is Jeff Frank. I'm a Senior Community Development Officer at the Island Institute, where our mission is to boldly navigate climate and economic change with island and coastal communities to expand opportunities and to deliver solutions. This webinar series is a part of our Future of Fishing program, which is sponsored by an earmark, a federal earmark, which was championed by Senators King and Collins, with a focus on helping the lobster fishing industry and fishing families in particular to diversify household income, to become more profitable and more resilient, and or to help current fishing practices become more efficient. The whole mission is to help island and coastal fishing families make more money, become more resilient, and become more resourceful, and find better financial futures. You'll see here, this is our Future of Fishing Toolkit on the Island Institute website, where we aggregate all of the resources that are coming through this program. The webinar series we're talking about today there'll be a new webinar series in the fall that'll have new topics based on feedback that we get from the fishing industry over the summer. The topics that we're going over this spring have been influenced by our advisory board of fishing industry folks, fishermen, and industry experts to talk about what we should be focusing on first. And so if you have feedback on these webinar topics, please reach out to me at the Island Institute, and I'm happy to incorporate that feedback in our next round of webinars. Next slide, please. As a part of this effort early on, you'll see another webinar coming up. We have one more. We've gone in partnership with Profit Decoder, which is a financial management tool created out of the College of the Atlantic, a business professor there and his co-founder. This is a very easy to use online financial management tool. And in partnership with Profit Decoder, we've made a version of this tool that is just specifically for the lobster fishing businesses. So when you log in, you can have a free 1-year account, and you'll put in different aspects, information about your business, and you can identify scenarios that, what if I fish one more extra day? How much more am I going to make? Am I going to lose? What if the price goes up? What if the price goes down? You can map out some of these different scenarios for your business and figure out, is this the right decision? Is that? And it's completely free. It's very easy to use and helps get your arms around some of the financial decision making, whether it's in your home or for your business. So that webinar is coming up tomorrow. We'll be talking at this time in 24 hours with Profit Decoder. And we have if you'd like to register, there's a QR code there, or you'll find the registration link on the Future of Fishing Toolkit website on the Island Institute or our events page. And we've had 3 webinars with Profit Decoder. The first is mostly introductory. The second gets a little bit more into getting the most out of the tool, different applications for what you might ask the tool to do for you. And this third one is going to be looking at diversifying income. So this might focus a little bit more on, hey, I need X amount of money to try out this other business idea or to this other revenue stream. How am I going to integrate that savings into my business now so I can do that later? That will be tomorrow at 10 o'clock. Next slide. And great, just for housekeeping, thank you again for being here today. This webinar is being recorded. If you are joining online, if you're watching live, your information is not being seen by anybody. in the recording, you are private. And if you have any questions, we can, the slide deck that you see today will be on the Island Institute's Future Fishing Toolkit website, as well as this recording, so you can download the slides afterwards. You can also take our emails. Today, we will be hosted by Jenn Dobransky of the Maine Small Business Development Centers, and as well as Christina Dodge. I believe with that, I'll turn this over to Jenn. Thank you, Jenn.
Great. Thank you, Jeff. And just reiterate, thank you for being here today. Um, Happy to talk about this topic today. My name is Jenn Dobransky, and I'm the business advisor for the Maine Small Business Development Center. I'm located in Midcoast, Maine. The Small Business Development Center is a primarily an educational organization that helps to empower small businesses across the state of Maine to start and grow their small businesses. In addition to webinars like this, we also offer free, confidential, individualized business advising that's one-on-one. So our Chris and I's website or email addresses on the previous page. Feel free, if you're interested in one-on-one business advising, please reach out to us, and we'd be happy to chat with you more. Chris, you want to say a couple of words?
Well, thanks, Jen. Good morning. My name is Chris Dodge, and I am Jen's counterpart for Central Maine, Kennebec, and Somerset counties. I've been with the SBDC for 2 years now. And prior to that, I spent almost 30 years working in community banks and nonprofit to support small business through lending. So I will come to this presentation wearing my lender hat a little bit and trying to provide just a little bit of a different perspective.
Awesome. Thank you, Chris. So in terms of our objectives for today, we will talk a little bit about thinking about why you need funding or money for your small business. A couple things to consider, certainly the personal financial situation that you have to consider, and then also the business financial situation. So that will lead us to a discussion about how to create a strong application, some of the essential documents that are required for kind of traditional lending purposes and other opportunities as well. What lenders look for, which is really important. And then we have kind of a compilation of other important information that we wanted to share with you today. And then Jeff is going to walk us through some of the programs, the various programs and resources that are available listed on the Island Institute website. We're just going to walk through that a bit step by step. And then, of course, we are open to your questions, so feel free to put those into the chat and we will address those as we go along here. In terms of some initial thoughts that we wanted to share with you, perhaps you're in a situation where you may not need to borrow money quite yet, or it's something that you're considering into the future. But it's always a good time for you to think about the relationship that you have with your lender or your banker or your lending institution or funding organization, whatever that may look like. The relationship that you develop with your team around you, whether that's your accountant, your attorney, all of your business advisor, all of those relationships are really important. So we encourage you to think of the relationship that you have with your funding institution or your banker as important as some of those other relationships that you have with other folks on your team. In terms of why you might need financing or funding, or consider this as an opportunity. There are lots of things that we see in terms of what gets funded, and really this is just a good time for you to think about your own business and kind of what the scenario is that you're thinking about at this stage. So certainly purchasing or upgrading equipment, whether you're getting a new vessel or repairing a current vessel that you have, certainly operating expenses or cash flow gaps. Those are all things to consider. And then there are probably some costs associated with the industry, specific to the industry. Again, I kind of listed a few here that may be a factor for you. Expansion certainly is one, and expansion can oftentimes be related to either getting a different kind of vessel, or to accommodate that expansion or growth. So just a couple of few ideas there for you to consider in terms of what you would need the financing for. And then just want to consider that you think about a couple of areas to start with the conversation in terms of getting your ducks in a row. The first is what your personal financial situation is, and I'm going to look at that. We're going to look at that just a little bit here, and then kind of the second question to kind of think about is what your business plan and financials look like. What is the health of the business, and can it support financing? So in terms of the personal financial considerations, the credit history and the credit score are oftentimes important in this process. And actually, our next webinar on May 1st is more of a deeper dive into the credit history and credit score. So if that's something that you want more information about, I encourage you to come to that next webinar to learn more. I'll say a little bit more about that, but in terms of other factors in your personal finances, certainly some kind of collateral, what you're bringing to the table. A personal guarantee is oftentimes a factor. And then also what we call a PFS, or a personal financial statement, which is a document that lists your assets and liabilities, or determines your net worth. So those are some of the things. And we have a lot of resources to share with you. So we'll kind of circle back to some of these pieces a little bit later on today. So in terms of the credit score, and again, this is just kind of a really brief overview, because we are going to get into this in our next webinar. You can see here in terms of how the credit score is determined, more than half, 65%, is determined by how much you owe, and then also your history of payments. So, and then you have some other factors here. Again, we're going to get into that a little bit more, but this is oftentimes a question that we receive. And then in addition to that, the score, oftentimes people ask about the score. And so I just kind of wanted to provide this visual for you to think about, excuse me, kind of where you are on this lovely rainbow of scores. And again, we'll talk a little bit more about this. You are able to get a excuse me, a free credit report that is available to you, again, without you without it having any impact. So the pull of your credit report has no impact on your score. You can get that report from annualcreditreport.com. Again, make sure that you go to this website as opposed to others. There's a lot of kind of spam and whatnot out there. but this is the legitimate source for getting your credit report and for free without any type of impact on your report or score rather. And so from there, we would like to talk about how to create a strong application. I'm going to pass it over to Chris.
Thanks, Jen. We are going to spend the next several slides talking about what's included in a successful application, what it looks like, and what you can do to strengthen yours. So one of the first steps you'll need to take when you're looking for a business loan is a business plan. And that is something that you can find resources online to do, or you can reach out to the Small Business Development Center and get help from an advisor doing so. You will need to provide the bank or your lender with your business financials. They will look for probably 2 to 3 years of historical numbers and looking ahead 2 to 3 years of projections. Again, that's something that there are tools out there to assist you with. So you're not just coming from a place of not knowing. When you do your projections, one of the really key elements of that is what we call your assumptions. And that is a description of how you got to those projections. If somebody asked you why you said this, you want to be able to defend that easily. So when you make your projections, you document those reasons so that your lender can look at that. One of the first pages that a lender is going to look at is the sources and uses. And this is really key. I know when I was a lender, it was the first thing I would look at. Sources and uses indicate how money will be used and where you're going to get the money. So sources will always equal uses. Typically, you start with the sources. I need X number of dollars to do this, and so much for this, and so much for this, and it comes up with what you need. And then you need to piece together where that's coming from, and that is your uses. In the process of underwriting a loan and reviewing your credit, banks look at the 6 C's, they call it, and they are capacity, capital, collateral, conditions, credit, and character. And we're just going to touch on each of these quickly, just so you are familiar with the language that's being used. So capacity is listed first because it's the most important. And it is making sure that they understand that you have the ability to repay the loan. So based on what you have for debt and income, what is your capacity to repay your lender? Capital. Capital is how much that you have invested. And in most situations, a lender is looking for you to have contributed to the project as well as asking them to. If you think about it, I used to say to people, if you want me to put money into your business, then you should have enough confidence in your business that you also will put money into it. It really shows that you're committed to the project, and it is an important piece. How much you put in will vary on how the money's being used and who the lender is. Collateral and personal guarantee. This is a really important piece because lenders don't just hand out money. You have to pledge something that you have to protect the loan to the bank. So if they're going to lend you $10,000, they want to have some form of security that if you defaulted on that loan, that they could liquidate and get their money back. So if you're buying a piece of equipment, that piece of equipment a year from now won't be worth what you're buying it for. So you need to have some other form of collateral. And as it says here in the slide, sometimes that means pledging property that you own. There are times that having another co-signer can also contribute to that. conditions. So this can have a pretty broad definition. I usually look at it as what is the use of the loan? So what are you buying it for? And what's the economic climate? And specifically, what does that look like within your industry? And that varies. If you apply for a loan today and somebody that applies 2 weeks from now, that could be very different. So you always hear timing is everything, and I think that that's what this is referring to. Your credit score. I think we all know that there's value to that whenever we need to get capital for something. And Jen kind of gave a chart a couple of slides earlier to talk about what the ranges are and how your score is calculated. Typically, if you are going to a commercial bank, you are going to have a score of 680 to 700 to be considered for a good rate loan. I think we can touch on this a little bit more later. The last C is character. And this speaks to the point that Jen made about having a relationship with your banker. So if you are dealing with a financial institution and you have deposit accounts and you manage your accounts responsibly, the bank remembers that. And that is like a gold star next to the credit C. So this one really should be one that you can be working on all the time, even when you're not looking to borrow money. So they're going to look at who you are, how responsible you are, and what your experience is. Does this make sense that you would need money for this and would know how to manage that money? Other things that you will want to consider when you are looking at loans, the loan type. So there are lines of credit, there are term loans, there are equipment loans, there are vehicle loans. So the loan type is going to need to match how you're using it. And typically your banker will discuss that with you. And then you'll need to look at how much money you're going to borrow. Jen, can we go back one slide, please? There we go. The other factors when you're applying for a loan would be the rates. The rate is largely determined by the Federal Reserve and is usually the bank is doing a multiple of what the prime rate is. The terms are looking basically at how long you have to pay the money back. And repayment options, I think we're going to touch on a little bit later. But depending on your industry and your lender, sometimes there are options other than making 12 equal payments per month. Collateral is what you are going to pledge to secure your loan. And eligibility, it typically needs to match, because banks are regulated, how you're using the money has to be an eligible use. So as I mentioned, there are term loans, and that is basically you borrow money for a fixed amount of time at a fixed rate and you repay it monthly. Lines of credit are a little bit more flexible, and that is you have an approved amount and you may or may not ever use that amount, but it's there if you have an expense that you need to cover. And typically the repayment is based on just the interest until you get ready to close out your line of credit, and then you would pay off the full balance. Equipment financing is typically for buying the equipment you need to run your business. And sometimes if you are buying specific equipment, the rates will be a little bit better because the lender will be familiar with what that equipment is and what the value of it is for collateral. A working capital loan, a lot of times a working capital loan is a line of credit, but typically it's a short-term loan and it's covering a very short-term use. A bank is always going to try to match the use of the money to the term. So if you're using something for a short-term basis, you're going to have a short term to repay the loan. If you're purchasing something that you're going to be using for 10 or more years, the term of the loan will be based on that. SBA loans. So these are loans. There's a couple of different ways they work, but basically the US government is providing either a guarantee or they're funding part of the loan to make the loan less risky for the bank. So the SBA is basically supporting the bank in sharing the risk with the bank. And loan amounts will range depending on what you need, what your business is doing. And I think this is going back to that very first vocabulary word of capacity. You're not going to borrow more than you can afford to pay back. And that is certainly something that your business advisor can give you some guidance on. Interest rates, and this is a really important section, and I think it's one that most people really care about. Typically between 6.5% to 15% or more. And I would say at the moment, 6.5 would be rare. I am seeing that most business loans are in the 8 to 10% range. And that rate is determined, as I said earlier, by the Federal Reserve, also by the type of loan, the term, the length of the loan, your credit score, and perhaps your collateral. And I think this is where I'd like to kind of drop in a point. When you start talking about a rate that's over 15%, that is what I would call predatory lending or subprime lending. And unfortunately, there are a lot of people out there that are peddling those products. And particularly in business, you will hear of lenders that are called hard money lenders, and they are the equivalent of a payday loan for a business. And I'm gonna throw my opinion in here on this based on 3 decades of experience. There is a better way than a hard money loan. Once you get into that arrangement, you could be paying, I've seen rates over 1,000%, and payments are drafted automatically from your bank account, sometimes daily. And in all of my years lending money to businesses, I have not seen one business that came out of a payday loan, out of a hard money loan successful. So if you're really in a hurry for funds, I think you reach out to some of your local resources to figure out how to get there without taking that option. It can be a fatal mistake for you. So loan terms, short term, we talked about seasonal needs, working capital needs, 6 months to 2 years to pay off. Medium term loan would be for, again, smaller items or things that don't have a useful life beyond 5 years. And long term is, again, boat purchase, business expansion, equipment that's going to last a long time. So, you're going to have to think about this when you're planning for your business and you're doing your financial projections, how long you're going to be paying this back. So what are repayment options? The traditional banking way is you make a monthly payment, similar to your home mortgage or your car loan. In industries that are seasonal, many lenders understand that you have a great variation from one month of the year to another, and they will come up with a seasonal payment schedule for you. And that typically means that in the months where you have the most income, you make a more significant payment. And then in your off season, you either make no payment or you make an interest only payment. But it should align with what your cash flow looks like. A balloon payment, these are not used as often. But what it would mean is that you're making small payments, maybe lower than what it would normally look like on a regular amortization. But you're going to get that for a short period of time, and then you're going to owe a big amount at the end. There are some reasons, and these are usually used in special circumstances, and this is probably not the time or place to get into what those look like. Collateral. Jenn and I in our work have been having a lot of conversations in the last couple of weeks about collateral. So in the fishing industry, your boats, your engines, your gear, your accounts receivable. Those are things that you can pledge as collateral. You could potentially get a small unsecured loan, but you will pay a higher rate for that. And I would be inclined to say in our current economic situation, unsecured loans are not going to be very common. Additional collateral can be used outside of what you have in your business. So if your lender tells you that you have insufficient collateral, meaning you have not pledged enough to cover the value of the loan, they'll look outside your business and ask you what you might have of value. So that might be a second mortgage on your home or securing a piece of equipment that you own outright. But typically, a lender is only going to lend you 80% of what your collateral is worth. So if you have $1,000 in collateral, you'll be able to get a loan for $800. Eligibility. What is your lender going to look for? So they obviously want to see historically how you've run your business by looking at your tax returns. Again, your credit score. Even if you're taking the loan out in the name of your business, you will be required to sign a personal guarantee, and your credit score will be factored into the decision. They'll also want to see that you have the appropriate licensing and permits to be operating your business and any required documentation for your vessel. Catch quotas, if they apply, might be figured in. And then back to the business plan that we mentioned earlier. And I will say, in the realm of borrowing money for your business, all roads point to the business plan. When we work with clients, I would say, and Jenn, you can feel free to pipe in here. I would say probably 3/4 of the clients I work with, regardless of whether they're starting up their business or growing their business, we work on a business plan together. And so our organization has developed a template that tries to check all the boxes that lenders are looking for. And also grantors. If you're applying for a grant, typically you need to supply a business plan for that too. So we've developed a template that walks you through almost in a tutorial format. And it says, as you can see here in this example, in the executive summary, you want to be able to check these boxes and say that you've talked about things like the purpose of a loan and what makes your business special, why you are capable of running your business, and what you'll use the money for and what you'll pledge for collateral. The rest of the template goes through each area of the business from operations to marketing to financials, and it's set up in a similar format. So you will just look at the questions there. Not every question is going to apply to your business. We use this across the board, regardless of industry. And so some situations just don't apply to you and you just skip over that. It's a little bit of work. It takes some commitment to get through. But there is plenty of support to help you do this. And I would say that this document isn't only for the purpose of getting a loan, but it's also for helping you as you operate your business. When you're making big decisions or you get to forks in the road, refer to this plan and make sure that you are aligning with your values when you set your business up and wrote your business plan. We also work with you on financial projections. And the format of those projections look a little different whether you're a startup or you're already in business. But we mentioned early on in the presentation that the sources and uses is a really important piece of this. And so you can see on here in the uses, you would start to fill this in with what you need. So if you need some new equipment, you'd put that in. Supplies, if you need working capital, you plug all of those numbers in and you're going to come up with a total. And that's the total amount of money you need to accomplish whatever you're setting out to do. Then you're going to go back up to the source section. And the first thing you're going to want to fill in is how much you can contribute to this. And then how much you're either looking to a bank or a grantor or another investor. So when you're finished that section, the dollar amount of your total sources needs to match the total dollar amount of your uses. And I know as a banker, is the first thing I looked at when I got a business plan, because I was just curious to see what this project looked like. It got my creative juices thinking about how we would put together a loan package. Personal financial statement. This is a pretty boilerplate form. Any lender is going to ask you to use it. And it is essentially, it's your personal balance sheet. It determines what your personal net worth is. And it's broken down into 4 sections. So your assets, that's everything you own, and your liabilities is everything you owe. And then it's your income and it's your expenses. And this also really determines your ability to pay. Sometimes you'll hear the term debt to income ratio, how much you owe versus how much you make. And so this is the form where that is determined. The U.S. Small Business Administration has this on their website, and it is what a lot of lenders use. And if they don't use it, it's something based on this. So I suggest that you do this before you go into a bank to apply for a loan so that you have some idea. I always say be as informed as you can. When you're going in to apply for a loan, know your credit score before. And you can start the next steps of applying. Depending on what type of loan you get, sometimes there are appraisals involved, and that adds time to the process. So you want to take that into account too. And the other point I think I'd like to make is not all loan products are created equal, and not all lenders are created equal. And I really can't emphasize this enough that your lender should be a member of your team, just like your business advisor. You want them to advocate for you and be your cheerleader. And so as much as you go to a bank and you're looking for them to impress you, or you're looking to impress them with who you are and why they should lend to you, they should also be trying to impress you. They need to be instilling confidence in you that they are there for your business, not just on the day you sign the loan documents, but they are going to be there to support you, troubleshoot with you, and just be an advocate moving forward. So, go in with confidence. And I think you're going to get to this in your next seminar, but if your credit is less than what it needs to be, there are steps to take to get that in a condition where you'll be eligible for this financing and won't have to look at hard money options like I had mentioned earlier. And as daunting as it sounds, once you've done it once, it'll be the same process anytime you need to do it again in the future.
Thank you, Chris.
Absolutely.
Before we move forward into the various programs and resources, I just wanted to reiterate these last three slides: the business plan template, the financial projections template, and also the personal financial statement. Those three kind of documents are available on the Future of Fishing website, on the Island Institute website. So if you have questions about those, feel free to reach out. But those are all documents that we've provided for you. So check those out. Jeff?
Great. Thank you so much, Chris. It's such a nice resource to be able to look at a template and go step by step through it to know what you need to get your arms around this planning if you're going in for a financing. I'm going to talk a little bit about the resources we have listed on the Island Institute's resource page. This is going to be an overview of not only the resources provided by the Island Institute, but we also act as an aggregator for keeping an eye out for what other organizations are providing and keeping them listed there. That being said, today we are announcing the opening of the Business Resilience Grants. Each year, the Island Institute has a pool of funding that it gives out in these Business Resilience Grants. True to their name, these are meant to help a business become more profitable and more resilient over time. These funds this year are directed to support our Future of Fishing program and are aimed at diversifying household income through new business ventures, or through providing funding that'll help you become more efficient with your current lobster fishing business. These grants are designed to try and strengthen island coastal communities by helping make these core harvesters in the lobster industry more protected, more profitable, and better off financially over time. So eligibility for these, you must be a Maine resident. You must be a part of a household that has a licensed lobstering business, lobster fisherman or woman, and demonstrate that this grant is going to be helping either explore a new revenue source, if there's something else you'd like to be doing in addition to add to your fishing income, or a way that you're going to use this grant to help make your current fishing more efficient, whether it's equipment, there could be a training, there could be a variety of different things. And on the website with this, we do have some example type of uses for this. So maybe technological upgrades you need for your boat, or even things like we're discussing here around business planning, or structuring your business to be a little bit stronger. You can apply these deadlines. The deadline for these grants is June 1st, and all awards will be made by the end of June. And so we're on tight time frame. And since we have a very narrow eligibility criteria, please share this grant with anybody who is currently fishing and may be looking for some additional funds to diversify. And I see we have a question. Kristen, I can take your question. Go right ahead. Okay.
Can you hear me?
Yes.
Great. I was wondering if any of you could speak to some of the kind of lending climate in Maine. I know that with fishing and lobster industry and the variability in the business, it can sometimes not line up super well with loans that banks are comfortable giving. And so I wondered if you could speak a little bit more to some of the local resources or places that might be a good starting point for folks.
I'll jump on that one. One of the central points to locate, as you say, sometimes your traditional community bank can be very sensitive to industries and timing, but there are so many other resources out there, and depending on their funding sources, they can't advertise. So for example, you'll never see an ad for the Small Business Development Center because we're federally funded. And that is true with a lot of the funding programs that are out there. In the state of Maine, there is a website that is called the Maine Funding Network. If you view that, you are prompted to enter in information about your businesses, and it works like a matchmaker. It's going to match your need and your business and your location with, I believe it's going to give you 3 matches and information on how to contact them. And within that list of funders in that network, even if it's one you don't match with, you can reach out to them separately. So we are talking about Mid-Coast Council of Governments, Coastal Enterprises, Community Concepts, and depending on where you are in the state, there are some local ones. York County has Southern Maine Finance. The Greater Portland area has Greater Portland Council of Governments.
Androscoggin County has Androscoggin Council, Androscoggin Valley Council of Governments. Kennebec County has the same thing. There are numerous nonprofits that are out there that are tasked with putting money out to businesses that aren't necessarily eligible for getting it from traditional banking sources. Does that answer your question, Kristen?
Yeah, that does. And it also just makes me think, would this also apply to like aquaculture if I wanted to diversify or supplement my, lobster industry income with an aquaculture venture? Would that also be a good resource?
Yes, absolutely.
Great. Thank you so much.
You're welcome.
Great mention, Chris, of the Maine Funding Network. And now we're looking at a screenshot of the Island Institute's resources page here. You can browse through this. It's meant to be updated regularly. One thing I'll pull out to mention here, in addition to the Maine Funding Network, is the Glen Fund loans. The Island Institute has a loan fund. We have a small amount of money. If you reach out to Alex Kravitz, if you're interested in looking for financing, we aim to use this funding to be pretty flexible and assisting folks who may fit in that category of not being able to find traditional loans from a bank, or need some flexibility around payment schedules, perhaps centering those around the harvest calendar. So reach out to Alex Kravitz there under the Glen Fund loans if you're looking for some funds and want to start a conversation. Further down, there's grants.gov is always being updated. On the next slide, I also want to highlight 2 resources. The Sunrise County Economic Council, specific to folks in Washington County who are working in this space. The SCEC works routinely with a lot of fishing communities and understands the different needs, the payment processes, and the types of needs within the fishing community. Amanda Smith is a partner on our Future Fishing project between the Island Institute and the Sunrise County Economic Council. So we can certainly reach out to Amanda or directly to SCEC and start a conversation if you're looking for funding. They have grants, they sometimes have loans, and it's a great resource. Also, Coastal Enterprise Incorporated, CEI has some great loans that focus on aquaculture, that focus on lobstering, and this is a great resource that usually is below what you would see from a typical bank. On to the next page. The SBA is on here, and these are 2 national funding sources. There's always the Small Business Administration that has loan programs. It's a great resource to compare what you have out there for options. Make sure that you understand this. The SBA is going to have a kind of baseline type of loan program that you can compare the more regional options towards. And the NOAA Fisheries Finance Program is another one to be aware of and take a look at if you're eligible and it fits for your resources. On to the next slide. I believe,
Yeah. I think
Jen,
that's
did
me.
you want to talk about this? Yeah.
Yeah, just kind of summarize or review kind of some of the things that we talked about today, to consider kind of what you're needing the funding for. Definitely getting your kind of personal and business financial ducks in a row prior to the process is always helpful, in order to kind of be as successful in the process. Definitely understanding the expectations. So hopefully this information will help empower you as you kind of move forward in this process. as you create a strong application or look into some of these resources for your own business. We've also created a checklist. So this will also be available in as a resource to you on the Island Institute website. This is just a screenshot of the first couple of pieces on the checklist, but it is a 2-page checklist of a lot of the things that we covered today, so that you can kind of work through it methodically and get those ducks in a row as you move forward. Just in terms, just a reminder about our final webinar in the series this spring. In a couple weeks, we'll be talking about credit and credit scores. And it's kind of all we have to kind of talk about today. So we're open to questions. If you want to give us some feedback, just kind of pause here for a moment.
And if you're watching this afterwards on the Island Institute's YouTube page, you can always follow up with us or with Jen or Chris, SBDC, for more information. And the resources will be on the Island Institute's Future of Fishing Toolkit website. Thank you very much, Jen and Chris. And with that, we'll see you at the next webinar. Bye.
Great. Take care. Bye-bye.